Welcome, guys. Thank you for joining in on this continuous learning series. We're going to continue on with stock chart analysis. All right, guys, I'm going to cover one slide here again. When you're doing stock chart analysis, it's very important to be able to recognize trends and trends that are taking place before they actually take place, right? So again, dividing the analysis that we're doing between fundamental and technical. This is, again, a technical analysis that you would go into. These are important when you're doing swing trades or you're trying to turn a profit or potentially options trade on a stock. What you want to do here, guys, I have three patterns identified: cup with handle, double bottom, and flat base, okay? What you want to do here is spot a trend, right? If you can spot this trend, you're able to make money and capitalize off of that trend. Now, if you're options trading, you know that you can make money when that stock's doing this, going up or going down, if you're able to spot that trend, okay? Now, the first trend you want to look for is what we called a cup with handle, okay? Just to see if this exists within the stock. Cyclical stocks can do this. When I say cyclical, I mean stocks that traditionally around a certain part of the year tend to trade itself up, but during other parts of the year, it could find itself down. Cyclical stocks are great stocks to own. They're consistent, right? It just depends on what that company is and what they're doing, right? Sometimes stocks will, let's say around the Christmas holidays, you got peak season. Certain stocks are just going to do well around that time. And when you come out of the holiday season, those stock prices and the earnings of the company tend to not do so well. But that's okay, because it could be a solid Fortune 500 company that does that year in and year out. I venture to say, inside of a lot of your 401ks, you're going to have stocks like this sitting in there. Now, why is trend analysis important when dealing with stocks like this? Well, when you're trying to, again, capitalize off of a move, of a shift in a certain direction. So if you do, let's say, a 3-year, okay, observation of a stock chart, and if you see something like that, you say, oh, I recognize this as being what they call a cup with handle. You see that, right? You can say, hey, this thing is probably going to do this again. It's probably going to dip and come back the other way, okay? So you can time that. You're fine. If you're in the stock and you notice, hey, it goes up and it comes, goes back down, but you're going to hold on it long term because of dividend payouts or stock splits that are occurring, that's fine as well. There's another trend or another pattern, the double bottom, right? When these stocks kind of do this sort of thing. So again, you're looking at a 3-year, at minimum, 3-year analysis of the stock, and you notice it peaks down, goes back up, hits down again and peaks back up. If you can time that properly, you can catch it right here and say, hey, this thing's probably going to be moving downwards if it does what it's done in the past. Hey, you put a, you go out there and do an options trade on this, right? You do an options call on that, okay? When I say options call, not technically call, but an options trade. Let me be clear on that one. All right. Also, there's another trend. This thing is called a flat base, right? So we kind of got this wiggly line here, okay? These things just up, down, all the time. So these are 3 patterns that you can look for when you're looking at these stock charts, and knowing what to do once you spot the pattern is totally up to you and the other trainings that we've given you. Of course, if you've been to the options courses, you know how to capitalize off of these. And if you're investing for the long haul, you can have an insurance that if the stock does tend to trade itself downwards, you know it's going to come back if the trend holds true. So you don't have to panic, like some people may panic during the during the duration of holding on a stock. Now, the one caveat I'm going to throw is that if there's something going on massive like COVID-19, whereas the whole entire economy has done a sudden shift in a certain direction, and because of that, stocks will tend to go uncharacteristically in a direction that it hadn't done before. Norwegian Cruise Line is one example that comes to mind.